Hi everyone, I'm Chrissy and I'm so excited to be involved in the Meet the Expert series through the Girl Scouts of the Northwestern Great Lakes. I was a Girl Scout from the time I was a daisy until I graduated high school, and so I'm really excited to be involved with this experience. Just to share a little bit more about myself, I grew up in Tennessee and then I went to college at the University of Alabama. I studied finance and economics, and I really grew a love of numbers and analyzing ratios. And so after I graduated, I started a career in federal banking regulation. I worked in that area for about a decade, and now I own an education tech company, and we're focused on promoting financial education. We partner with schools and community organizations to help students and community members understand how to manage their money. We love partnering with your council to help Girl Scouts around your area earn financial literacy and entrepreneurship badges. Our courses are offered on demand and they're totally virtual, and we just think this is a great way to provide some financial education. And so today, for this series, I'm going to go through some key money management skills and tips that you need to manage your money now and to think about as you get older. The three main areas that we're going to focus on are budgeting, bank accounts, and credit/loans. Those seem to be some of the biggest questions that we get from our Girl Scout users, and so I thought we'd start there and kind of learn together. We're going to start by talking about budgets. That is just such a huge thing that we hear about often at VicTreeFi, and so I just thought I'd talk to you about them today. This is really important to me because when I first went off on my own, I was really not great at managing my own money. While, I studied finance in school and I should have, I did know the concepts, but really just like thinking about the reality of what, managing my money actually meant, I just didn't really have a concept. So I'm really excited to talk to you about that today and get you thinking about this as well. When we think about budgets, budgets have 4 elements: your income, your savings, your necessary living expenses, and your discretionary money. So we'll talk about each element briefly just to kind of introduce these concepts to you. At VicTreeFi, we have courses to help with this for the Girl Scouts and for other students if you want to get a little bit more in depth. But we'll start with income. We like to tell everyone that your budget really starts with your income because it's what pays for the whole rest of your budget. So, right now, while you're in school, you might not have any income. You could have inconsistent income. Maybe you receive money, for your birthday or as a gift or at holidays. You could have fairly consistent income. Maybe you have a part-time job or you earn money doing chores. When you get older, when you graduate, you'll have a job and, you'll have either a salary which is kind of guaranteed pay for your work, or you might earn hourly wages. There's all different ways to earn income. Another thing to think about with your income is just that you don't get to keep all of it. You do have to pay some in taxes, or you'll have other deductions. Maybe some of your health insurance comes out of your income. So while your salary might be one thing, your take-home pay will be something maybe a little bit different after you deduct taxes and other deductions. But regardless, we like to encourage you, moving to the next part of the budget, to save some of this money. So right now that you're young, you have inconsistent money coming in, and we just want you to think about setting a little bit aside in savings. When you get older and you have more stable income, it's great to try to set maybe about 20% of your income aside. We just did a live workshop with some girls actually from all over the country, and we were just discussing how important this is just to practice saving your money. And that's just a great habit to get into now, regardless of how much you can actually save. The next part of your budget, again, not necessarily quite as important right now because, usually your parents or caregivers will take care of this part, but your necessary living expenses. So this means, we like to say, anything that keeps you happy and healthy. So, this could be your water bill, electricity, your house payment or rent. It could be insurance payments, internet, whatever can keep you going and keep you functioning, keep you in your job. That's a necessary living expense. Also, groceries, like normal groceries. So again, right now, maybe you don't necessarily have to think about this, but you might be responsible for helping to purchase clothes for school or shoes. Those are necessary living expenses. The final part of your budget is your discretionary money. Now, this is the fun part. It's my favorite part of the budget. This is the money you have left over after you take your income, you've set money aside for savings, and then you've paid for your necessary living expenses. Whatever is left is yours to have fun with. If you choose, you can definitely save it. That's always a great conservative thing to do. But you can also use it for fun things. Go out to dinner with your friends, buy some new cute clothes, just fun things that get you excited. It's just a great way to encourage you to set your budget. Now let's talk about bank accounts. I get so many questions about the different types of bank accounts, especially right now while you're in school and you might not even have any kind of banking account open. It's great to just get a good idea about what all's involved with a bank account, how you open it, what types of transactions are there. So let's learn a little bit. The first type of bank account is your checking account. Your checking account is known as a transaction account, and this just means that you can kind of do anything from this account. So from this account, you can pay your bills. So a lot of your parents, that's what they're paying their bills from. You can write checks. Your debit card goes through this account. You have unlimited transactions that you can do through here. The checking account, though, doesn't really earn any interest, and we'll talk about that in a minute, but just keep that in mind. The next type of account is a savings account. This account does earn a little bit of interest. However, your transactions are restricted within this account. So you can only withdraw money about 6 times per month from this account. And you also have other restrictions. You wouldn't want to pay your bills through this account or something like that. So this is really for setting money aside. Like you learned in budgeting, each month we really want you, as you make money, to practice setting aside a little bit. So you might want to set it in a savings account. So now let's talk about CDs. CDs are similar to a savings account in that you do earn interest, but your money is trapped in there for a longer term. So you'll earn a little bit more interest than you would in a savings account, but you have to keep your money in there for a certain length of time. So, this could be anywhere between 6 months, a year, even longer. This is great if you're really wanting to focus on a goal. So maybe, you want to set money aside into that certificate of deposit just for something in the future and you don't need it right away. And like I said, you earn a little bit more interest, so your money's really working for you. Finally, we can talk about money market deposit accounts. Just like with a savings account or a CD, you will earn interest with these accounts, which is great. The only real difference is how the bank can use your money. So that's the next thing we're going to talk about, which I think this is so fascinating. Really understanding, why does a bank even want your money? So the first thing to know or to really think about is that banks are businesses. So just like any business, they want to make money. How do they make money? Well, banks use the money that you deposit into them, just as we said with your checking account, savings account, CDs, money markets. They use the money that you put in the bank and they lend it out to others. So this is in the form of loans, or they might also purchase securities, just like maybe your parents buy things in the stock market or purchase bonds. Banks can do that, and they're earning interest on all of these products. So the bank is putting your money to work. So really what you need to get out of this is that it's great to keep your money in a checking account because it's easy to access and you can use it to pay your bills. But it's also good to know, get the bank to pay you. They're using your money to make money for themselves, so they should pay you. So definitely think about keeping money in a savings account or a longer term CD, a money market. You'll really benefit from earning some of that interest. Okay, for the final part of this video, we're going to learn a little bit about credit and loans, which is super important to understand, especially as you get older. So I just wanted to introduce you to a couple key concepts. So the first part, credit. What is credit? It just means that you can purchase something now and you pay for it at a later date. You can think of this like a credit card. Maybe your parents use a credit card. They can charge something immediately, and at the end of the month, they pay off their credit card. Also a loan, someone gives you money right now and you have to pay it back in the future. It's just something, again, you get access right now and you repay it later. But to obtain any kind of loan or to use credit, you need to have a good credit score. So we can get really into the weeds and we have some fun courses about this if you're interested, but your credit score is just a snapshot of how well you've managed your money in the past. There's 3 credit rating agencies and they monitor how you're making payments. So are you paying your credit card? Are you paying bills on time? Do you owe anything? Do you have any big loans out? So for example, like we were talking about credit cards, say your mom has a credit card and every month she pays it on time, her credit score is going to be great. You just have to make sure that you're paying all your bills and you never borrow more money than you can pay back. So speaking of credit cards, we always get questions about them. People are very apprehensive to open a credit card, and rightly so. They can be scary. They have really high interest rates, but if you want to establish a solid credit score, you do need to have a history of paying back something. So we definitely recommend, if possible, when you get older, maybe after you graduate high school or college, you can open a small limit credit card so you can't really get into trouble, maybe like $500, and you can pay that back every month and it will keep your credit history alive, which is great. Definitely be careful with your credit cards. Do not just charge a bunch of things on them, especially when you graduate high school and if you go to college or just when you're fresh out on your own, you will get bombarded with credit card offers. So be aware of all the terms, don't just take something. But really, if you can manage credit card debt appropriately and just pay it off every month, you're going to be golden and you're going to have a really, really great credit score. You also might need to show your credit score if you rent an apartment, if you open a cell phone plan. There's all different kinds of reasons that someone might check your credit. So since we're talking about credit cards, let's talk for just a second about loans in general, because a credit card is a loan, as we've established. So I just want to teach you a couple key terms. The first is principal. Principal is the total amount that you've borrowed for a loan. So if I take out a $10,000 loan, my principal is $10,000. Interest rate is the amount that you're charged. Remember we said it's kind of the fee to borrow money, and it's expressed as a percentage of that principal amount. So I might borrow $10,000 and I have to pay 5% interest on it. So that means every year I'll have to pay 5% of the outstanding value. Repayment term refers to how long you have to pay it back. So, maybe I borrowed $10,000 and I agree that I'm going to pay it back in 5 years. Your loan will have payments, usually they're monthly payments. So your interest rate is really kind of broken down into little tiny monthly payments, but that's kind of getting into the nitty-gritty right now. So those are really the basics. One more little tiny fact about loans that I just love to tell people, because it is so important, is that when you pay your loan back, you know how I said that you have the principal amount that you borrow and then the interest that you have to repay kind of as a fee? Well, every month you have your monthly payment that you're paying back over whatever the term is. And every month that payment includes a portion where you're paying back the principal and then another portion where you're just paying back the interest that you owe. And so it's really interesting. You can check out this thing. It's called an amortization table, and it shows you the makeup of each payment. It took me forever to realize that, my payments weren't going directly to pay back that initial $10,000 that I borrowed. It's only going back to partially pay it off. The rest you're just paying in fees. So very interesting, really fun to learn about. I love talking about loans. There's so many interesting concepts. So if y'all are interested in that, please, comment below. I would love to kind of correspond with you about that. Very neat. That really wraps up my discussion with everyone tonight. This has been so fun. I really look forward to corresponding with everyone in the chat. And I'm just excited to be involved and teach y'all a little bit about money management skills. And I'd love, like I said, to continue this conversation. Again, I'm Chrissy from VicTreeFi. Check out our courses as well. We have them for every single Girl Scout grade level. You can earn a ton of badges, at least 4 per grade. So check those out. They're all on demand. And I look forward to seeing everyone soon. Thank you.